Welcome back, folks. We had the Dow finish up 51, NASDAQ down 25, S&P's up 2.5, and as we do many times when the Fed comes out with a statement or have that news conference, we have our man, Mr. Chris Gaffney, the president of EverBank World Markets. And folks, when you come over to our website at TFNN, you're going to see right on the right-hand side, you're going to see the EverBank banner. As you hit that banner, you're going to see what comes up. And then what it is, the second chance to grow with a new financial resource. And what this is all about is this. So picture something. The 5-year Treasury right now is at 1.326. I'm not quite sure what a 5-year CD is at. But EverBank has something that's very unique. They're cutting-edge products, and they have been for a long period of time. In this particular case, what we're talking about is that we're talking about the 5-year market-safe commodity CD. So what is it? It's a 5-year CD. It has 8 commodities inside it. Your principal is 100% protected. It's $1,500 to open. That's the minimum. It's FDIC insured. It's IRA eligible. And now Chris is going to walk us through, because the only thing you're giving up inside this is, I believe, what the 5-year CD would get you, and I think it's somewhere about 1.5%, because this CD here can get you up to 70% per year, and then for the whole 5 years of these 8 commodities that Chris and I are going to be talking about. Chris Gaffney, welcome back to TFNN.
Thanks. It's always a pleasure.
I'm telling you, man, it's like Janet Yellen. It seems, in fact, I got a couple emails like this, Chris. It seems like the longer that this gets put off, the harder it's going to be to raise rates.
Oh, you bet. And yeah, I've read through the announcement. We had some interviews, and it's, from what I read, we're going to be lower longer. I mean, rates are not going to go anywhere. She's not in a hurry to raise interest rates. The Fed is going to keep these rates lower longer. And really, now we've got the Bank of Japan up next, and of course they're at a negative interest rate policy,
yes,
along with the ECB. And again, they both are looking to increase that stimulus. So, yeah, as you point out, we're going to be in a low interest rate or even negative interest rate environment for a while, which really, makes opportunities in, the opportunity cost of owning a non-interest-bearing asset much cheaper. So it's positive for commodities, positive for the precious metals, and for our market-safe CDs, because the performance is going to be based off of the commodities, and again, your only cost associated with this market-safe CD is really the opportunity cost of the interest that you would be earning in a regular 5-year CD.
I know, it's amazing, and it seems that what happens, folks, is that the Fed can keep saying that, listen, they want to raise rates. But when you look at the world rates, as Chris just went through, Japan on a 10-year, is at 0.5% negative. It's like, you're going to be kidding me. I mean, that's a big number, folks, okay?
That's on the debt. That's crazy.
I know, that's on the 10-year. Never mind the 5-year, okay? If I bring the 5-year up, it's amazing. So let's go through the CD, because this is so cool, folks, understanding, and there's plenty of you folks that, are in the CD market, okay? Well, guess what? You can be in the CD market, and you can get upside potential. So the commodities we're talking about is this, folks, okay? There's 8 commodities inside here. I believe each one of them is 7.5%? No, 7, 8, no, it'd be more than that. Okay, so there's 8 commodities. We have oil, gold, silver, soybeans, corn, sugar, copper, and nickel.
Right, and each is 12.5% weighted, so they're evenly weighted. And again, we have a mix of both precious metals, some industrial metals, and then the agricultural commodities, and then the big boy of oil. The big commodity of oil. And the investors, our purchasers of this CD, benefit if those commodities rise in price, and you'll get. Each year it's an averaging, so each year we're going to compare the original price of those commodities to the price at the end of that year, and then pay our record that upside, which
Yes.
is capped at 70%. At the end of the 5-year term, we average all of those interim performances, and that is what you'll receive on the CDs. So again, if there's any positive return, you'll get that up to 70%. If, in fact, commodities fall further from here, if that should happen, you get the return of your principal. And it is FDIC insured, eligible for an IRA, like you said, and a low minimum deposit. The entry deposit is only $1,500. So it's something that you can do in that IRA account, or something that if you want to dip your toes into the commodity markets, which can be pretty volatile, this is a great way to get exposure to that commodity asset class, which is important to have, with no downside risk whatsoever.
There's no doubt. You know, we had a quick question in here, Chris. How does it work with folks that live in the UK? We got a couple of folks that live in the UK, and they're asking, can an overseas resident buy into this?
You can. We may jump through a few more hoops to open an account. So the first thing you have to do is open an account here at Everbank. There's a few more hoops, but absolutely we can open these accounts for non-U.S. citizens. It's
a great deal. So what happens, folks? So check this out. I'm going to just put this up for you for a second, so you can just see a few of these commodities too, folks, because what's so cool about this, okay, is that, well, you know that I'm prejudiced, folks, because I'm a bull in commodities right now. And I have, I go bullish and bearish, Chris, over the course of years. But my take on commodities right now in general, I mean, they've got killed for years. We've had the run. And the bottom line is that whether you look at wheat, whether you look at soybeans, whether you look at corn, these things are off the lows. And, this is, so probability-wise, it's also a nice time to get into it because, again, you go back to the aspect of how much you're going to get for a normal CD inside a bank. You're not giving up, well, you're really not giving up, you're just giving up whatever that principal, whatever that interest is that they give you. And I think it's only running about 1.5% anyway, right? So it's
right. And we have some great rates, but even our rates are not that high. There's just not a lot of interest in the markets right now. There's a lot of interest that's being offered. And again, that's actually a very good environment for commodities. It is. I agree with you. I'm a commodity bull because, that environment is actually really good and that's what we saw during the first quarter. You saw the dollar come off a little bit, and commodities were some of the best performing asset classes of any of them.
And every single day, folks, okay, yesterday, Andy and I, Chris, we were going through the population, and it's amazing when you put a population clock up. What happens, folks, is that demand versus supply, guess what? Every single day there's more people, there's more mouths to feed, all of the above. So come over to our website at TFNN. You can hit the banner, or you can give them a call, and they'll be more than happy to take care of you. They have a great center there, their own people taking care of you. Their number is 855-750-4051. That's 855-750-4051. Just ask them about the 5-year Market Safe Commodity Solution CD. Chris, you have a great one, a safe one. Of course, it's always great having you on, and look forward to having you on again.
You bet. Thanks a lot.
Thanks so much, man. Have a great one. Have a safe one. You stay right there, folks, and we'll be coming right back. That number again is 855-750-4051. Coming right back, folks. If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.